and State Bank of India. But let's address one more one more earnings which we're expecting post the closing today. That's of Reliance Industries. Standard disclaimer: Reliance owns both TV18 and Network 18. Prayesh Jain is with us from India Infoline. Prayesh, hi, good afternoon. So the poll that I have done says that the number could be slightly muted compared to last quarter's stupendous number. What's your own number?
Yeah, definitely. Even we are expecting it to be a muted set of numbers in this time around. Our expectations for GRM is around $10.5 per barrel, and on the bottom line it's around 6,830 crores. So it's quite muted as compared to what we had seen in a stellar quarter in Q3. So even with regards to the petchem segment, we don't see a major strength there. The quarter could be a flattish one for the petchem, but GRMs can actually have declined. If you look at the benchmarks, they declined substantially, but Reliance with its kind of flexibility in slate and also flexibility in sourcing can really outperform the benchmark, and that's the reason we've assumed a lower decline and then as compared to the benchmark. So we're expecting it to be around $10.5 per barrel as compared to $11.5 in the previous quarter. So refining is where we see weakness. Petchem should be flattish. Oil and gas, again, no major surprises there. So net I think it's going to be a muted set of numbers.
Okay, and what about the stock performance, Prayesh? Do you expect that will be muted as well over the next 3 to 6 months?
No, Sonia, and we've been buyers of Reliance Industries at every decline, and we see the refining margins having some strength in the next couple of years at the global level because the capacity additions are not coming up as they were planned initially. So and demand has not slowed down substantially. Like China has some slowdown, but if you look at India, it's growing at a very strong pace, the petroleum product consumption. So in that sense, the GRMs are likely to remain strong. Petchem spreads might see some pressure, but they should recover over the medium term. So the main core business should do well, and also in the meanwhile we'll hear from the management about the launch of Jio, which should remove some apprehensions about the launch, and those all clarity with regard to Jio should prop up the valuations, and we think that it's a good buying opportunity for Reliance even at current levels. We have a 1-year target of 1200 on the stock.
Okay, Mr. Jain, you have also done of course estimate on Reliance, and your consolidated number is 7175 crore. What else will you be watching out for?
See, Anuj, 2 or 3 things. Firstly, if you see the GRM, I'm expecting GRM to be at $10.9 because if you see for Q3, it was $11.5, and if you take a Singapore benchmark, that fell by about 30 cents, but from $8 to $7.7 or maybe 7.75 if you want to be precise. So I don't see any reason of the GRM falling higher by about maybe 30 cents for Reliance Industries also. But what is the worrying part is that there has been a drop of in the crude prices in this quarter from $44 to about $36. So I'm factoring in an inventory loss of about 260 crore, and that will impact the overall refining margin, the EBIT refining at 6,060 crore. That is number one. Number two, generally in March quarter, because the company is making the treasury gain out of the investments into the mutual funds and all that, which gets redeemed in this March quarter. So I am expecting that probably because of that there will be extra increase of 100 crore in the other income, which will not get reflected into the interest income. Interest income is separate, which I have estimated at about 655 crore, but this treasury gain will be included in the other income to the extent of about 100 crore. So because of these two things, on a consolidated basis, I have taken a PAT of closure to about 7,175 crore, and obviously petchem are going to show sequential growth where the EBIT has been estimated at 2,740 crore against 2,640 crore on a sequential basis. So these are the 2 or 3 things which I will be watching. Firstly on GRM at 10.90, and as I said, of the treasury income. Yeah.
Okay. Prayesh, that's about the core business. You spoke in brief about the RelGeo launch. Just wanted some more color on that, because some analysts do believe that, you know, the high amount of capex and the heavy losses that the company will have to incur in the first 1 year may impact the present value of the company. Do you think that will have any impact on the stock at all? The uncertainty to do with the RelGeo launch and the expenses that the company will have to incur?
Yeah, see, the thing is, the Reliance Jio launch has been delayed. You know, initially it was at the end of calendar 2015. Then we were expecting it to be the end of FY16. Now we are expecting it to be somewhere in the mid of FY17. So there has been a constant delay. So there are some apprehensions built around the launch. And with regards to the cost, definitely the company has invested more than 1 lakh crore for Reliance Jio. But nevertheless, what we feel is, you know, like even for a company like the telecom companies have made losses. They take their time to scale up their businesses, and the gestation period is pretty long for the telecom business. So that's pretty much captured in the valuations, where, you know, people are not ascribing a lot of value to the Jio business. And I think whenever these clarities come, whenever these numbers come, we will definitely tune our estimates and factor in more realistic numbers. Currently, we all are making just guesstimates, and as soon as the numbers come out, then we will start working with real numbers and working with closer estimates.
All right, Prayesh, thanks a lot for your time today and with those preview of Reliance's numbers. Sandeep Wagle also joins us now for Last Hour Strategy. Sandeep, hi.